Walmart, America's largest retailer by square footage, has long been the leader in its industry, but now it faces tough competition. In order to continue to be a dominant player in its industry, it's going to have to adapt. So what exactly does that mean for Walmart and for you? Walmart recently announced Walmart Plus in response to Amazon Prime. It is going to leverage its massive retail presence to provide same-day delivery, discounts on gasoline at its Sam's Club's locations, and even reserved parking for Walmart Plus members. The Walmart that you have come to love is changing for you. And change can sometimes be uncomfortable because you don't really know what to expect. But I think this time it's good because everyone deserves a second chance. A once leader in its industry has fallen, but that does not mean it can't get back up. You see, courage is not how you act when things are going well, but actually when things are going bad. You must dig in deep and admit that things have changed, and that's okay because it's all about how you respond to adversity. Welcome back to the channel, ladies and gentlemen. My name is Racky Ryan. Today I'm going to be valuing one of my favorite stocks, Walmart. So Walmart is one of my favorite stocks, and it's also one of my largest holdings. Take a look. So I have 69 shares of Walmart, and that's not a joke. It's just a coincidence. But I am very bullish on the company going forward. I'm a really big fan of the CEO, Doug McMillon. I think that all of the changes that he is working on will really benefit the company. I think that Walmart Plus is going to be a huge win for Walmart. For example, when Amazon ships you something, they have to ship it from thousands of miles away. Whereas Walmart has tons of different supercenters, Sam's Clubs, scattered all throughout the United States. So their shipping costs are going to be a fraction of that. Also, it's worth noting the super wild statistic. Over 90% of Americans live within 10 miles of a Walmart. Think about that. I'll repeat it. Over 90% of Americans live within 10 miles of a Walmart. And a lot of this talk with Walmart Plus and what I'm discussing is about Walmart's presence in America. But did you know that Walmart also owns a gigantic company in India called Flipkart? Flipkart is an e-commerce company headquartered in India. The company initially focused on online book sales before expanding into other categories. The parent organization is Walmart. Now, haven't we heard that story before? Amazon? So I'm clearly bullish on Walmart because of Walmart Plus, its international presence, and also all of the other moves that Doug McMillon is making. Today, it actually was just announced that the U.S. administration is going to be looking into the TikTok acquisition. I was going to speak upon that, but since that might not actually happen anymore, I'm going to just go ahead and not address it. But I will say if that does occur, that will give Walmart an even bigger boost because it'll give them access to deep learning, which is artificial intelligence, and they're going to use that to predict human behavior so that they can essentially sell to humans more efficiently. I did really like the idea of Walmart owning a percentage of TikTok. That is a little bit of bad news, I will admit it. But regardless, I'm not gonna go sell all my shares. I still am bullish on Walmart. It just is what it is. With all that being said, I'm gonna dive into the DCF model and put a price target onto Walmart. Oh, and by the way, if you're enjoying this video, please make sure to hit the like button as well as subscribe. Now I'll dive on in. This right here is the financials from Morningstar. In order to get this, you just go to Morningstar, you click the key ratios, full key ratios data, and it's right here. As always, when valuing a stock using my DCF model, the most important metric is the free cash flow per share. We have year 2020, and we're going to go back 5 years in order to calculate the compound annual growth rate. You're going to project out a future growth rate, and then we're going to eventually get our intrinsic value. Okay, so we're going to take year 2020 free cash flow per share, which is 4.82. We're going to take 2015 free cash flow per share, which is 4.18. That's going to give us a compound annual growth rate of 3%. You should not really focus on this number because last year we had COVID-19 as a pandemic, and any company in retail had a down year. And now Walmart is actually prepared for the future with Walmart Plus. If you look back at 2019 versus 2014, if we didn't know 2020's numbers, it was actually 17%. So again, don't focus on this number. We are running 3 scenarios, and these numbers do not change. So I'm just going to enter them now. So in the first scenario, we're going to run 24%. The discount rate is going to be 10%, which is the annual return on the S&P 500. The GDP growth is 3%. This gives an intrinsic value of 150.85. Walmart is currently trading at 144.13. 144.13. So that's going to give you 4.66% immediate upside. On the second scenario I'm going to run, it's going to be 27% future growth rate for the free cash flow per share, 10% discount rate as always, 3% GDP as always. This is going to give an intrinsic value of 169, currently trading at 144.13. And this is going to give 17% upside from the current price. Now, in the most bullish case scenario, we're going to run 28% future growth rate for free cash flow per share, 10% discount rate, 3% GDP. It's currently trading at 144.13. This gives an intrinsic value of 175.43. So this scenario gives you 21% upside from the current price. Under all 3 scenarios, Walmart is a buy. Another thing that a value investor really likes to see is that the shares are decreasing over time. What this tells me is that Walmart thinks that their stock is undervalued compared to the market. I'm going to give Walmart a price target of 169.